Good evening, ladies and gentlemen. This is Christopher Aaron. This is our weekend gold and silver market update. Thank you for joining me if you are new, and also thanks for sticking with me if you've been here since the beginning of this channel. The point of this channel is to show you what is actually happening in the gold and silver markets so that hopefully you can save some money. You can perhaps time your purchases a little bit better and generally feel more confident that you can actually see what is happening in these markets. We need to be really careful because it's been my observation that there are two main groups of people that exist right now in the mainstream financial press, and one group is trying to convince you that there's no point of investing in gold and silver. They are worthless. They are a relic from an age gone by. And the other group is trying to tell you that they are going to skyrocket next month or next week, and you need to buy it all now because the world is ending. And I don't subscribe to either one of those two views. I don't sell gold and silver. What I do sell, if you want to call it that, is my analysis. This channel will always be for free. Why is this so important? Because let's look at this quote from Henry Ford, for example, one of the founders of the American automobile industry. It is well enough that people of our nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. So this is a critical time in these markets. Based on my analysis, we are reaching a very important turning point. And if you've arrived at this point, it's for a reason. You understand the fundamentals. You've done the research on fiat currencies and the corruption in the government and banking system. And you said it's time to either protect myself or attempt to profit in the future. The only problem is that the market can oftentimes move in the opposite direction of the fundamental factors for a period of years or even decades. The market can do what it wants to do for as long as it wants to do it. And it is important for us to pay attention to the actual signals in the market so that we don't go crazy, so that we can actually see what's happening and not lose our minds here if perhaps the price of gold and silver continue to decline for the next few months or the better part of 2016. And so that we can understand the market is not necessarily always right. When is that turning point coming? Well, we have some clues that we pay attention to. So we're looking at the US dollar index, this being the US dollar versus a basket of international currencies. We looked at this a couple months ago, and I decided we should update ourselves on this because it looks like there's going to be a move here in the dollar pretty shortly. So this is a relative comparison of the dollar versus these other currencies, and we can see that we find ourselves in what would be a primary intermediate term uptrend shown by these blue colored lines. This has been going on since the crash of 2008. The dollar has been getting stronger versus most other world currencies. So we find ourselves today right around this 99 level on the index. So this pattern here looks like the dollar is going to be continuing to rise over the next year at least. This is a continuation consolidation pattern from a rising dollar over the last 5 years. If we back this chart out and look at this from a 35-year perspective, we're seeing the same uptrend here. We are seeing in red a break of what was a primary trend down in the dollar since the early 80s. So there's a different trend that has been emerging here in the dollar since 2008, 2009. Now, my target for how high the dollar could move over the course of the next year to 18 months is right up here, shown in this green circle. And this is based on a technical pattern that I'm observing, this being a primary trend that we're in and a continuation pattern here shown between this 93 and this 100 level. Typically, when you have a back and forth consolidation after an up move, this represents a continuation consolidation. And we would expect to see the dollar rising in equal amplitude of this consolidation, which in that case is about 7 on this index. So we would be looking to see a rise to about 107 on the dollar index over the course of the next year, 18 months. Nothing dramatic, but some of these currencies, such as the Canadian dollar and the Australian dollar and even the euro, will probably weaken during this time by a moderate amount. Now, what does this mean for the price of gold? If we have a dollar that continues to rise throughout the course of the next year or so, let's bring up that dollar chart here. We'll scrunch it up to the top, and let's compare this exact same time frame price of gold. Gold on the bottom, US dollar index on the top. Now, if you didn't see the presentation from a few months ago, this will be new, and there is a myth or a lie out there, depending on what you want to call it, that is propagated by most of the mainstream financial press that says the following. It says, the dollar is rising, therefore gold is going to fall. Because gold is priced in dollars, and if the dollar gets stronger, gold will fall. And I'm here to show you in no uncertain terms that this is completely false over the long run. I don't know why this point is brought up so many times, but it's absolutely false in anything other than the short run. So for example, look at where we are right now. I said we're right around 99. Let's call it 100. Let's round it to 100 on the dollar index. And let's draw a line straight down from some other times that we were at 100 on the dollar index and look at the corresponding price of gold at that time. So all you got to do is follow right from here, 100 down. So where were we here, the price of gold? The last time the dollar index was at 100. This was right around 11.25. Let's look at another example. 100 on the price of the US dollar index from 2003, corresponding to roughly $450 on the price of gold. 1999, 100 on the dollar index, corresponding to $250 for an ounce of gold. And one more example all the way back from the 1980s, 100 on the dollar index corresponding to somewhere in the $600 to $700 range. Of course, there were many more hits in here, but this is just 4 examples to show you. So the takeaway here is that over the long run, This measure of the dollar versus other currencies has no bearing on the price of gold. So if you ever read that in any sort of publication, I mean, you will see this brought up in mainstream publications. The Economist, you'll see this in Barron's. It's just not true. So this is most likely a fear tactic designed to get you to sell your gold out of some sort of fear that the dollar is rising. Now, yes, over a short time frame, for example, we're looking here, let's say 2011 to 2015, the dollar has risen by about 20%, and we can see gold has fallen during this time. So yeah, over the short run, sometimes that correlation is visible. But over the long run, the proof is right here in front of your eyes. So this is the kind of thing that I want to bring to people's attention because I believe this is such an important time frame for people that have chosen to invest in the precious metals. You need to arm yourself with proper information, and I'm just trying to help people to do that. It's Sunday evening, so we're looking at the price of gold from Thursday. Excuse me, we went one too far. Thursday being shown in the light blue color and Friday being shown in the red color. And then Sunday evening starting off here, which would be Monday morning in Asia. Not a whole lot new in the price of gold, basically very flat for the last couple days. We need to look at this from another perspective though. So from the 6-month perspective, we can see that this still plots nicely on the short-term uptrend that we've been looking at since the middle of December. This uptrend's still valid. Of course, this being the GLD fund, so these numbers don't correspond perfectly to the price of gold, but the ratio does. The movement of the line does. So I use this so you can see that on the 6-month time frame. When we back it up to the longer view, the numbers on the y-axis will be correct. We switch to the GDX fund to look at the companies that dig this precious metal out of the ground, because they often lead the price of gold, and we are seeing basically a retest of the summer lows here for the gold miners. So these two markets are properly correlated, I should say, for this 6-month time frame. I do not have a leading indicator signal from the gold mining complex at this time. So we have to wait and see. I often get signals from the gold mining complex for those who are interested in more aggressive trading or investing for short-term profits sometimes that then you can do whatever you want with. I often get these early indicator signals from the gold mining complex, which is why I watch it so closely. Backing that gold chart out to 7 years now we're looking at this with the accurate US dollar price here on the y-axis. And we can see we are still in a very well-defined downtrend on the 7-year time frame. Looking here at the bottom, we are seeing the outperformance of gold versus the rest of major world commodities as represented by the CRB index. Gold hitting a new high at any point in the last 15 years, if I was to extend this back, versus other commodities. So even as the price has been moving down, gold is being accumulated. And this is typically the kind of action that leads us to a bottom at some point in the intermediate term future. Switching this over to look at the gold mining complex for the same amount of time, 7 years, and we are looking at a series of embedded patterns here. A series of declines that we are still in. Long-term declines shown in magenta, primary term declines shown in blue, short-term trend lines shown in teal. So we're still attempting to break out of this short-term downtrend in teal. And notice that these two, the magenta and the teal color here, are converging very, very closely. So when we have a break of this short-term downtrend, it will most likely represent a break out of this longer-term downtrend as well. So it will be a significant break when it happens. It hasn't happened yet. We are seeing an increase in the volume still in the gold mining sector, a significant increase, really. I mean, look at the volume compared to the entire run-up into 2011. Look at this volume down here. This is the number of shares that were traded per day in all of the gold mining companies. And then we see this increase here as it's been making these lows, yes, but a much less steep series of lows than the initial breaks. So a ton of volume is coming in here, which gives me a signal that there is a lot of interest in this sector. This signal would tend to lead the rebound in the sector by a period of time, perhaps 6 months, perhaps a year. So another signal that the bottom may not be in yet for gold, yes, but it is most likely approaching in 2016. That is my thesis. Looking at silver, always related to gold, but a little bit different. So again, we had the action on Thursday, which had sort of a spike down and then a recovery by the end of the day. We had the action on Friday, which was a spike up and then a drop back before the end of the day, before we find ourselves here starting off Sunday evening. So you can see silver is just really struggling to move definitively in either direction. And you can really see why when we look at this on the 6-month time frame. We have this consolidation, up and down, back and forth consolidation. This, of course, using the SLV fund, which is not recommended to own. It's for my charting purposes. But it's that consolidation, basically 25 cents plus or minus the $14 level. For the last 2.5 months, guys, this won't last for too much longer. These consolidations in such a tight range tend to break in one direction or the other and then lead to a move that continues in the direction of the break. So we're watching this very closely. I know it seems kind of like, maybe watching the price of silver right now kind of seems like watching wallpaper dry. But you will remember these lower volatility times in the next few years, and you'll say, wow, remember when the price was only moving 10 or 20 cents per day, and now we're moving $1 or $2 in every direction. I watched Silver Wheaton, which is a silver mining company, one of the leading companies in the sector, for early indicator signals across the silver space. I discussed this at length in the last presentation. You can go back and watch that if you want more detail, but I'm just commenting on the price action today. We are still below the summer lows on Silver Wheaton, so this is giving me a clue that perhaps that move lower in silver will be to the downside at some point, perhaps this week or next week. Let's watch for that. That move lower, should it come in silver, as long as that move lower is not more than $2, still fits within my forecast for this being a terminal bottoming wedge pattern across the silver complex, forming a very important low after nearly 5 years of decline. So even if that price were to move another 50 cents, $1.50 lower, which you may want to save some powder for, some money, you may want to set that aside and see if you can purchase some silver a little bit cheaper here. So you'll see my analysis is not telling you to just buy. I don't sell precious metals. I'm just trying to give the best analysis that I can to hopefully earn your trust to some degree, that I at least have a system that helps us to understand what are the likely potentials for the market. There is real money to be saved and made by timing purchases sometimes a little bit better. This low should be this historic low that I'm looking at when we look at the 35-year chart of silver coming in right here at this long-term linear uptrend line. And of course, sometimes these markets like to violate these lines on a week or so basis to kind of scare everyone for the last final low. So I wouldn't be surprised to see that. But this is the trend that I'm looking at, the general trend, a trend of rising lows and increasing highs. The next high should probably take us into the vicinity of the $50 level. It won't break through that right away, according to my analysis. There will be some battle that happens here at some point in the next 5 years, and we'll see how that battle goes before we gauge the next move higher. Thank you once again for joining me. I hope you have a very lovely Sunday evening. I produce these videos twice a week to try to keep everyone as up to date as possible. And the next video will be on Wednesday evening, which is East Coast U.S. time. That is Thursday for some of you in Europe and in Asia. Thank you again for joining me. I will see you midweek.